Good evening and welcome. My name is Dawna Jones and I host the Evolutionary Provocateur podcast on management-issues.com. Today we're here to talk about doom and gloom and how to use that to jump up a level in terms of your performance as a company and as a personal leader. To start with, I just experimented and I went on Google, as everyone does, and I Googled economic crisis. Well, I came up with 61 million hits on economic crisis. I came up with 290 million on just crisis alone, so I think we like crisis a lot. And I also did a little thing on downturn, economic downturn, and came up with 9 million on that. Of course, that got me going, so then I did doom and gloom, and that came up with over 1.5 million or something like that. So point is that there's a lot of emphasis on the negative right now. There's a lot of emphasis. There's a lot of sub-talk that obviously will trigger fear amongst people. And that's not a good thing. Why? Well, for one, obviously, outside of the obvious, which is who wants to be feeling fearful, there's the scientific principle that simply put, and Dr. Bruce Lipton's work on my website and also on the Management Issues site, you'll hear a podcast from him. It basically says you can be in one of two places cellularly. You can't be in both. You can either be in growth or protection. What's the relevance? Well, we are made of cells, companies are made of people, and therefore it is just simply a replication. It's a stack laying. So as long as you're battening down the hatches, laying people off, feeding into the fear, it's like a feeding frenzy, you are definitely in protection and you cannot grow. You can use these times to grow. You just can't do it by being fearful. So let's explore what that would look like. Let's explore how you could actually use these times to really accelerate your growth, or at least expand and hold your own during this period of time. First of all, let me introduce you to Jay Bragdon. On the podcast series on management issues under Evolutionary Provocateur, you'll find a podcast series with Jay Bragdon, who wrote the book Profit for Life. Now, Jay is an investment advisor for high net worth families. He has been studying and researching companies that live by living asset management, in other words, living asset stewardship, but his index is called the Living Asset Management Performance Index, and it is comparable to the Morgan Stanley World Index. He has been watching how companies who use the means to achieve living asset stewardship, by that meaning living assets are people and nature. In other words, we don't ignore that which feeds us, the planet in this case. He has been exploring how these companies perform relative to others. And he split them off from companies that had one foot in the idea of living asset, like triple bottom line, social environmental responsibility, and the other foot still in command control. And the difference in performance is pretty outstanding. As you'll hear on the podcast with Jay, one of the things he points out is in the worst year economically, the LAMP index did 11% better than the Morgan Stanley index did, because these are comparable indexes, by the way. And for those of you who want more detail, best to either buy Jay's book and or listen to the podcasts that are on the site. So what does that tell you about right now? Well, it means if you've got one foot in the idea of it being a good thing, and the other foot still in command control, how are you going to know? Let's look at your indicators. Your indicators are going to be simple. First of all, if you've got a great idea and you can't get it to market fast enough, you've got a little bit too much command control in your hierarchy. And you really have not yet grasped how performance operates. Now that's going to be a bit different, but certainly the research tells us it runs horizontally, and obviously it's really hard to control horizontal, especially when the networks expand far outside the company. We've had other interviews on that in the podcast, so definitely tune into those. The other thing that you're going to see as an indicator is anything to do with employee engagement. These are times when people can't leave themselves behind to go to work. So their heart has to be in their work. And the easiest way I can think about that is that if you're driving a car and your car breaks down because it's run out of gas, do you change the motor? No. Do you fix the locks? No. Do you change the bumper? Do you tinker around? No. You put gas in it. It's energy that fuels companies. Now this sounds obvious and it might sound a little bit arrogant, it might sound condescending. That's not the intention. But if you take a close look at how mechanistically companies have been thinking, and it, you know, frankly, you inherited it. It's been going on for a long time. I think in Jay's interview he describes it's a 17th century notion in science, and we're having to go through a different shift on that. So that's really what this means, is that you have to pay attention to the fuel that's firing this car as much as you do, and that, of course, is what this is about. So anything that has to do with stress-related illness, if you've got those on your metrics, holistically, generally what it means is you're repressing on some level the systems and processes that are embedded in your company's belief structure, i.e. its culture, are suppressing talent. It's not about there's something wrong with these people. No, it's got to do with there's some inability for these folks to express themselves, for your employees to express themselves in a way that matters for them. Because with meaning and fulfillment, and there's research studies on this, with meaning and fulfillment, morale goes up, you know, obviously engagement goes up, innovation's going to be powered. There's a whole lot of benefits to that. So, with those indicators in mind then, what does this mean for you as a leader? Well, it means you've got to be brave, it means you've got to be bold, and it means you have to have the courage to ask the tough questions, dig deep into the really what underlies everything. This isn't the time for moving the furniture around. Business processing engineering, not so much. This is the time for really digging deep into how do we see, you know, what are the habits that we use in this company that we rely on? It's like brushing your teeth, but you've forgotten that you know why you're brushing your teeth. So take a close look at those. So it's the greatest time in our history probably to reflect, renew, really discover what's at the source of many of the things that are going on in the company that aren't working for you overall, for the group as a collective, the collective intelligence, and to recalibrate those so that they do. Finally, the other step that's related to this is to notice where the focus is in your company. We call it, there's an old shamanic saying that goes, energy flows where attention goes. If the attention is going on the negative, attention is going on the layoffs, cutbacks, if it's only going on the expense side of the balance sheet and you're forgetting to look at the whole picture, then great opportunity in there, no question. Great opportunity to look at the whole thing. If the energy is again focusing on battening down the hatches, on surviving, if that's the kind of language you're hearing in the organization, it's time to renew the spirit and really, well, I'll say party, simply put, but really to celebrate the parts of life that are working well, because it's by focusing on those parts of life that other things expand. And finally, this is the chance for you as a leader to explore what you've really got. I think it's Gandhi, and I know I've used this quote before, but I can't help but using it again. Gandhi once said that the difference between what we're capable of doing and what we truly are doing will change and solve the problems of the world. That is the opportunity we have in front of us. This is the first of a series of video casts. Look forward to seeing you again. Thanks for joining me.